me make this.
Well, hello, everybody.
Good morning.
Hello.
Episode 83 today. So we had some technical issues this morning already. But now we're back and we're online and we're rolling. So let's start with two truths and a lie to get us a little bit into the mood because the vibes are off a little bit after our struggles. Okay, we have a Thanksgiving edition today. So I hope no one cheated.
We did not.
Oh,
We
perfect.
didn't even read them, to be honest.
Interesting.
Mhm.
Mm-hmm.
Yeah.
Okay. Next time I don't send out notes all together.
I like it.
On the fly, Lisa. All right.
On the fly. Anyways, let's start. So first, truth or lie. The S&P 500 has averaged a 0.28% return during Thanksgiving week. About double the typical average weekly return that would be. B, Black Friday was not originally about shopping. The term originally referred to the 1869 gold market crash. Or C, Black Friday shows traditionally stronger spending than Cyber Monday. In 2024, it was a 13.3 billion on Black Friday and 10.8 billion sales on Cyber Monday. So you let me know what you think. Let's start with Kyle. Keith looked too terrified.
I'm going to go with A is the lie.
Okay, that was quick.
Well, that was
because I'm looking at the chart below it, and I'm assuming that it's a little bit higher.
All right. Oh, look at Kyle. I'm going. Well, I'm saying that
could be wrong.
I think Kyle can't read a chart. Maybe I don't know.
Yeah, maybe.
I was doing the math. I was doing the math. I did the verse. So say half of that is 15 basis points times a week. So you do that, 60 bips times 12. That's 7. That seems about a good average for the S&P. That's kind of. So I'm working logic backward. I say A is true.
All right.
C's got way too many numbers in it. So I hope Lisa didn't throw that the Black Friday. I thought Cyber's starting to pass Black Friday.
Is it?
It's getting close. I don't know. I guess we're going to find out.
People leave their houses still?
I'm going to say C is actually true. So I have no idea what this 1869, 60. I don't have my glasses on now, so I can't read that gold market crash.
Today is just not our day, it seems.
No,
Pack it up.
Okay, so A is the lie for Kyle, and you
B.
say B.
Yeah.
Well, I'm glad I got you both.
Oh, what? Really?
Lies actually C.
Oh,
so
it's all the
Cyber
numbers.
Monday, I just switched the sales numbers for Cyber Monday
yeah.
and Black Friday. Cyber Monday is stronger.
Classic.
Yeah, I knew it was getting strong.
And Black Friday was originally not about shopping. That's true. It referred to the gold market crash, which was referred to as Black Friday. And then the, I think Philadelphia police in the 60s used that term because there was such craziness with a football game and with tourists and kind of traffic that they used it as that, and since then it's used for the shopping event after Thanksgiving.
Interesting. I always thought it was when the retailers went from red to black.
That's what I was saying.
No.
Really? Yeah, I think Lisa's reading some. We kind of got to double check on this one.
Oh wow! So I need to be fact checked again. Wow, what a great day!
That was the thing. It was always retail.
Well, wait. So what? So A is
A is correct.
It says average.
Yep.
So down here was this median.
Yep.
Dang.
I realized that, but I was like, I am not saying anything.
Didn't read the header.
Anyways, let's talk
logic to work on that.
Let's talk a little bit more about Thanksgiving, though, which we figured out by now. That was not a lie. That Thanksgiving generally is a good week for the markets, and we saw it already this week.
Yep.
And we're recording before the close on Wednesday, so things can change. But for now, it looks pretty good. So it's another calendar little twitch, so to speak, a little phenomenon, like calendar phenomenon. The markets are closed tomorrow for Thanksgiving, and on Friday they close early at 1 p.m. Eastern time.
Mm-hmm.
So shorter trading week. And it's called the Thanksgiving Rally. So what are some of the reasons for that? Keith, I start with you. Can you think of some reasons why we would see that weird calendar blip here?
Yeah, well, part of it, I think it goes back to what Kyle and I are talking about, this retail sales and Black Friday. How I think of Black Friday is kind of one very important sales day. It's less so now because it used to be, you get the paper, have all the ads in the Black Friday, people go out shopping, doorbusters, all that stuff. Now the internet's changed quite a bit of that just because you can buy all year round. They offer discounts, not just on Black Friday. They have different drop dates and
Prime Day.
Prime Day. You have just different, Best Buy runs, every day's got a different special, where I think before it was a lot of hype around Black. I mean, I remember, broadcasters sit in front of whatever store and be a stampede of people as they open the door for whatever new gadget or toy that people were excited about. So
For
I think that
Tickle
was
Me Elmo and the Beanie Babies.
Yeah, I stood in line for one.
What is it? Tickle Me Elmo.
Oh boy,
do you remember that?
I do.
Yeah, that was like people running
like
over
a plushie,
yeah, it's like a plush, but then it would tickle and then kind of wiggle and giggle and.
Okay.
That was like a really long time. Or
Yeah,
was that in the 90s?
Yeah, probably. Yeah, probably in the 90s.
You're
and
both
then,
dating yourself now.
Then my kids had these little hamster things that were like the hottest thing that I remember never having to go and stand in line, but my one daughter convinced me to go stand in line for about 5 minutes, and that was about all we could take to.
Oh, and then you exited the line. You're like, I'm done.
No, that's all the line was.
Oh,
okay.
So
okay. No. It was as the store was opening, so it wasn't like it was way people. I wasn't gonna stand in line, especially as in Minnesota it's cold and stuff. But anyway, so the point of the question, I think it's a lot of retail sales driving some hype. People get excited about it. Generally speaking, it's when retailers turn positive. I just think there's a positive vibe around Thanksgiving. So I don't think there's anything unique. The shortness of the week is nice. I think the investors feel, thankful, and there's kind of not doing a whole lot of selling going on. That's my rationale.
Yeah. Kyle?
Yeah, I would agree with that. I mean, I think depending on the year, I know I mean, volumes definitely go down. People are taking time off. And I think to a certain extent, because you're kind of skidding into year end, some traditional money is definitely parking it in less volatile. They're doing less trading. They're locking in their bonus for next year. Still a little early for that, but it's definitely close depending on where your numbers are at. So that could explain some of it for sure. But yeah, I think people in general are just feeling good and charitable and less.
And I mean, there's less trading to begin with, like 25 to 30% less trading, which can amplify some volatility.
Yeah, you can get some negative news
and liquidity and all of that, because traders, like you said, are out or the whole week and kind of being in the holiday mode and don't do a whole lot of things. Also, when we talk about the Thanksgiving cheer and all of that, and you mentioned it with the retail sales, so we get a lot of data points next week about how Black Friday went, how Cyber Monday went, and if the US consumer is still happy and chugging along. And we got some data points this week with consumer confidence, which is at a 7-month low due to, unemployment, softening labor market where people are concerned about inflation still not there. But so confidence is low. Still, sometimes the dispersion between how people feel and what they do is very different. We saw that consumer confidence is low for a while now, but people still keep spending. Now we get some real data points, and which is also important right before the holiday season, right? Because the next calendar quirk that happens is the so-called Santa Claus rally, which is a little bit more known than the Thanksgiving rally. So do you think that people are now kind of waiting for data points coming in, how this Black Friday and shopping events went? And do you think this could set the stage for the Santa Claus rally, that we have one or we don't have one? Or do you think there's other reasons for that to occur?
Yeah, I think that'll be key for the next 6 weeks till we finish the year here, is how these sales come in. And because the one, earnings has generally been really good for Q3, so that was nice to see. Kind of that's why the market's where it's at, I believe. And now we have to see to make sure the consumers are still spending, which is one of our main thesis is, if you workers working, they have money in his pocket, they love to spend, and that's so we'll start seeing details next week of Cyber Monday, Black Friday, and if they're weak, I think that definitely kind of put a little bit of a pause in the market. I think if they're in line, that's going to be good enough. And of all the different, you didn't ask it, but of all the different sell in May, these different added, these, what are these things called? Little
axioms.
Axioms that I think the one that generally holds pretty true is the Santa Claus rally. If you want to label it that, I think people just generally want to finish the year relatively strong. I think it's up pretty consistently, and the last 2 months of the year are the best 2 months, seasonally. So that's part of it's Thanksgiving, and then you roll into Christmas. If you've had, markets are up 3 out of 4 years and you're up 8 to 10%, usually you don't want to give it back in December. Now January is a different story. Maybe you get to January like, okay, restarting the year. So that's where I'm at.
Kyle, what do you think? Are we set up for a Santa Claus rally despite all the economic things that are going on, like unemployment, softening labor market? We just got like a September job report, which the economy added more jobs than economists had expected, which was positive, but the unemployment rate also ticked up a little bit, and then we maybe have some revisions down the road from these job ads. We will not receive an October unemployment rate because the data for September was basically already collected and it was just not released. But for October, there's not even data collected. So that's just too long ago to give a great overview, which could weigh on the sentiment, right? Because September is a long time ago. October, we do not get. November, we probably get what we heard so far after the Fed decision in the beginning of December, which is also not
it's not going to be on the first Friday.
What I've heard, it's later. I don't know if there could have been changes.
No, I haven't heard that.
I heard that as well.
Yeah, but what I've heard is it's not the traditional usual schedule still, which is still negative for the Fed, thinking of there's more dispersion in the opinions about Fed officials. And that kind of, investors are all over the place, expecting a rate cut or not. I mean, we saw that the expectations from 75% down to 30 up if we will have a rate cut or not. So do you think despite all of that, we could still have a Santa Claus rally? Or
I definitely think we do. I mean, I feel like people are rightfully, a little bit worried about the sentiment. Understandable. It's not great. It's pretty low. That being said, like the jobs, you'd mentioned the unemployment rate ticked up a little bit. Part of that, when you peel back the numbers, is participation rate. Like more workers entered the job hunt looking for a job. So optically, it made it look like the numbers were worse, when in reality, second derivative, you're like, oh, this is actually a better thing. They're, you're having more people come back, from the sidelines. So I think the Santa Claus rally is really going to hinge on the Fed, unfortunately, for right or for wrong. I think people are anchoring to that. And, we saw the poly market data yesterday is kind of
all over the place.
Yeah, it's kind of laughable, to be honest. So,
which is weird. That never really happens, though. I think that's a whole interesting discussion. The volatility of expectations for the Fed.
One I mean, we could spend a lot of time on the poly market thing, because it's almost like, who are the actors that are actually indicating sentiment and expectations in that arena. I've never placed a bet on poly market.
No.
Have you?
No, but I mean, CME is doing the same thing, which that's been around longer. I think it's less gambling-ish like, but it's kind of tracking the same
it's
thing.
more like people from the industry having more insight maybe, or
but that's gone from
data points.
80% down to like 25, and now back at the 85%.
Right. So that's my point. So it's
within
almost
2
like
days.
Right. It's like the gamification, memification of it. So that's not to necessarily discount the wisdom of crowds, because there's definitely value in that. And also, I feel like it's almost like the echo chamber of social media algorithms is like, once you get into a rhythm or whatever, it's like, that cascade effect, or quantitative algorithmic trading. Like once you start seeing a tipping point, people are just going to rush into it. And that's why you're seeing these wild swings here. So I discount the poly market stuff in terms of like expectations. It's fun to look at.
Yeah.
But we'll see what the Fed does. I think either way, that's because it's early in the month. You'll see some noise around that, but I think the Santa Claus rally is going to come. It's been a good year in general.
Mhm.
You've talked about this, Keith, a gazillion times. Like, yeah, it's been a little volatile, but earnings have looked really good this year. Inflation's a little
Market
higher,
is
but it's
still
not
up
bad.
above average,
Yeah,
above
yeah.
historical
15,
average.
Everything is very, is very green pretty much
Mhm.
across the board. So people should be feeling good. And, at the end of the year, I feel like just from anecdotal experience, like if you're on an institutional platform and you're cruising into the second week of December and you're like, okay, we're beating our benchmark by 300 basis points, 2-3%, feeling pretty good. You're not going to make wild
Mhm.
swings, and
Wild
that's
bets,
going to
yeah.
keep the markets kind of like on the trajectory that they're on.
Mhm. Mhm.
Right.
And I mean, Santa Claus rally is, I think, the most known of these patterns. But again, we talked about the Thanksgiving rally. Then the January effect is coming in January. Then there's the sell in May and go
Sell in May, go
away.
away,
Mhm.
yeah.
All of these different September blues, where it said, okay, September is the worst month of the year, which was not true last year, not true this year. October is the most volatile. So all of these quirks and patterns, they have some merit to it. Sometimes there's not one reason why these occur. And the question is, what are we making out of that? So what are we advising investors or our clients who think, okay, we probably should trade based on that? So what is our stance on what to do and how to deal with these patterns? Keith, let's start with you.
Yeah, like I said, of all those patterns, I think this is the one that's most legit. If I had to
Mhm.
rank order them, I think it's to what Kyle and I were talking about. I think sentiment's good, earnings are good. You're coming to the year end. You generally markets are up, so you're generally happy, and that's where you kind of want to end it. And I mean, things could change. If you remember, was it back in Trump's first term, the potentially government shutdown was coming
Mhm.
on. They're going into a strike. Markets were just terrible at the beginning of December, but then they bottomed. I think it was actually on Christmas Eve, and then they promptly, that started a new bull run. So you can have some times when December where things kind of
Mhm.
get a little sideways, and what could do is maybe some of this Fed talk, maybe some disappointment in retail. So that would change my mind. But I think as far as what I'm seeing today, I mean, again, making a 6-week prediction is pretty hard. I say we go flat to up
Mhm.
slightly, and then January might be a different story. We pull a lot of performance forward,
Mhm.
seeing all these good things
Mhm.
we're talking about. When we talk markets, S&P is up 26, 25, and 16 year to date. So it's 3, I would call them monster years.
Mhm.
So we'll see. I mean, earnings have been going that direction, which is fundamentally the case. Valuations got a little cheaper. You're starting to see some market broadening out, which is encouraging. We're not going to talk AI today for one, so we won't talk about that. But those large cap
Mhm.
growth names have pulled back some, either giving you an opportunity to maybe get into them, or you're starting to see that pullback and other areas are
Mhm.
holding up, which I think is encouraging. So it's some of these big names that are leading market cap wise in the market are pulling back, and the market's still pretty good performance wise,
Yeah.
which is
Mhm.
good, because it's like sometimes you get the leaders pulling back and then everybody falls back, and all of a sudden you get a 8-10% quick drop, and we're not seeing that right now.
Yeah, I mean, looking at like a pair trade between Nvidia and Google, like in the last couple of weeks, is crazy. The performance differential.
They had it, I think I saw a chart this morning. I think it was a 1 year. It's like 180% versus, 100. It's almost up 2x what Nvidia is up.
Yeah.
Google,
is,
yeah.
1.8
And the
times.
It's really
interesting thing
surprising.
is,
Which is
because
crazy.
Yeah, it's really surprising.
because when you think back to 2022 when ChatGPT was released, that was like, said to be the Google killer, right?
Mhm.
Because it's like, that's a new search engine. Google is dead, basically.
Mhm.
And now it's like, okay, Google is still there and it's strong on the software side
Mhm.
and on the hardware side now with creating their own chips that
Mhm.
could rival Nvidia. Meta is saying they're probably buying and partnering with Google on that to buy chips from them that could be cheaper maybe down the road for the data centers. So it seems they're really
Mhm.
Yeah,
crushing it on both sides.
Well, there were some
on the
clearing
chip and
events.
on the
There were some clearing events too with the DOJ
Yeah,
and some of the
yeah.
litigation stuff.
Mhm.
So
which is interesting, because if you just go back to spring, kind of when Kyle started over here, it was a conservative value stock, and Kyle's actually got it in the G50,
a
which is our
big position.
big
Yeah.
position. So and we own other portfolios, or certainly our growth portfolios, but it was one of those names that was certainly a lot of overhang on it, and Google's done, search is over, AI is going to crush it. And it's just like, from the stock performance the last 4 months, that was a dead wrong call.
Yeah.
I mean, it wasn't close. It's stock's up almost double or something like that, 80 some percent off the lows.
Since off the lows.
June, I increased the position significantly in contrarian.
Yeah, so it's a name we own. We like it. At some point in time now, it's no longer 16, 18 times. You're in the low 20s, but still for the growth rate, probably a pretty good spot to be.
So to get back to, we heard that the Santa Claus rally is the most legit one. So what are we doing with the others? Should investors trade on them, or what are we thinking? What is our opinion on how to deal with all of these quirks that get a lot of media attention when they happen? Certainly.
Well, it's almost like the media people need something to talk about, right? So you've got to have news for the day. If it's not bleeding, it's not leading, right? So, and those rallies don't sell themselves. So I think at the end of the day, it's the adage of it's not timing the market, it's time in the market, right? So having clients work with advisors is pretty critical to balance that kind of emotional euphoria and despair. And as the markets are climbing, everybody's trying to think that they're geniuses and we can do this, it's great, double down, leverage, DTFs, whatever it is. That's all fine and well until it's not. So we just saw in the last month, I mean, the memory is short. I mean, think about this year. It's a great year. The numbers we're up 16%, whatever. The volatility this year has been dramatic. I mean, you had Liberation Day, April 2nd. From that point, the markets, corrected down 20%.
Yeah.
I think what was the full drawdown, 22 or something like that?
Yeah, full drawdown, because we were slightly up, almost down into the bear market territory.
Yeah, I mean, it was
close.
That was a big, scary thing. And then just literally 3 weeks ago, the last 2 to 3 weeks, you saw, 5%, 6% pullback or whatever it was in totality. But that the fear index, people, the VIX, people are just, we're at near all-time highs, and people are more fearful than during the financial crisis.
Yeah.
It's just like this bipolar, it's very unusual. So that being said, time in the market, not timing the market, being diversified, all of these Santa Claus rally, Thanksgiving, sell and may go away, all these, axioms or whatever, they're fine. But, being a short-term investor and having that really myopic lens is not good for your long-term.
It's a nice bonfire story.
It's a great bonfire story, right?
Yeah. Well, look at the volatility in like the Bitcoin, this year too. You mentioned that. It's like that's the same thing. It's gone from 120 down to 80 almost, or so, down 30-some%. And we had people calling, loving it. It's like, okay, just size appropriately, right? It's there's opportunity there. I think still there is.
And Bitcoin gave back all their gains. For this year.
Yeah.
It's
so but then so now on a pullback, you're like, if that's what we look at. Tactically, should we be adding a little bit? That's the kind of things that we do as active portfolio managers. But we're not changing your whole portfolio and say, okay, there's a buying opportunity on whatever the stock is down 50%. Like when Google pulled back, Kyle was adding to it. We added to it as well. It's you got to pick your spots, but he's exactly right. Time in the martin's way more important than try to time, especially your overall allocation. That's why it's important to work with an advisor to kind of make sure your allocation's set properly, kind of
not over allocated, rebalancing after 2 such great years.
They're kind of a psychologist as well, right? They kind of they call all excited. Oh, my neighbor's got this, that, and why aren't we in this? Because you got a diversified plan, you got a little bit of green money, you got a little bit of yellow money, kind of safe to get you to your targets and objectives. It's your plan, so not your neighbor's plan.
Yeah. So. I mean, it's still like, I mean, there's value in diversification, right? And that's an answer to a lot of things. And it's sometimes seems boring, right? It's like, oh, diversification, I cannot hear it anymore. And when you're like well diversified, and there's a quote out there, I don't know from who, it's like, you always have to say sorry for something in your portfolio, right? Because something doesn't work while other things work. But it's like, that's the thing it is, right? Because if you have like a big position and it doesn't work well, then it's really bad, right? And you have a really big drawdown. So you will never be on the top. You will never be in the bottom. You're just
well, yeah. I mean, at the end of the day,
Mhm.
it goes back when I was at Oppenheimer Funds. Our CEO would always tell people, we're looking to create a smooth ride for clients,
Mhm.
right? You diversify. You're taking active management decisions. You're not closet indexing. You're doing the right thing, and you want a nice smooth ride. It doesn't mean you're to the moon, and
Right. Yeah.
so that's
On the other end, you're not falling off a cliff.
right. That's
Exactly.
it's the right thing to do
Yeah.
for people.
For sure.
Well, that's a great note to change to our.
We should get to the fun stuff.
We get to the
Thanksgiving.
fun stuff now.
Yeah.
Yes. Yep. So for the watch list, I thought we do a Thanksgiving edition as well because it's Gobble Gobble week.
Oh,
I needed to get the Gobble Gobble in there. So
you're becoming
Anyways.
American. Pretty quick.
So and I kind of want to do like a fun stuff, like a fun little game. If we think about the stock market, if the stock market would be a Thanksgiving dinner, what sector of the market would be the turkey, the star of the show, basically, that everyone is waiting for? And what sector would be more the, I don't know, I never had it myself, but I heard as observing Americans talking about their Thanksgiving dinners that a green bean mash situation
Yeah,
is
green
what
bean
no one
casserole.
likes, but what always makes it to the dinner table.
Mhm.
So what sector would be that thing?
We'll let Chef Boyardee over here. It's like, oh, by the way, Lisa, we may have to apologize to Kyle.
Oh, yeah, we have to.
On air.
Definitely.
When we were preparing the show, it was Kyle was talking about his baking prowess,
Yeah.
and Lisa and I were questioning it.
Yep.
And then
Because we haven't
understandably,
because we haven't seen evidence
haven't
yet.
seen evidence of it, and then
And everything needs to be fact checked. So
yeah, and the sharp elbows
Mhm.
Lisa mentioned yesterday is like,
Mhm.
we're recording tomorrow. I don't see any goods.
I think
That's true.
Kyle got afraid and frightened that I would
Oh.
mention that to our listeners today, that he's might not be the star baker at all in the end. So he
Actually
whipped
picked it up.
together some
No,
dessert. for
picked
us.
it up over at the 7-Eleven.
7-Eleven,
7-Eleven.
Coburn's or wherever it was.
Yeah.
Kyle brought in this sweet pie today.
Yeah.
Oh, so good.
Oh, it's really good. What was it? It was like
It's like
Almonds,
walnuts,
bourbon. It's like a pecan
chocolate.
pie, but with
and
bourbon and
chocolates.
chocolate on the bottom and
It's
walnuts.
fantastic.
Yeah.
It's really good.
So Keith, what is
kudos.
our verdict? So
Mhm.
I have to give Chef Boyardee is no longer Chef Boyardee. It's
Yeah.
Chef
Very good.
Kyle. It's
Very
Chef
good.
Kyle, yeah,
fantastic.
yeah.
So kudos to Kyle. We want to make sure we get that on air because
Yep,
Very good.
definitely.
I was a little doubtful of he's talking about how good of a chef and baker he is. I'm like, 'cause
Yeah.
I can't. I'm
Yeah.
terrible at it. So it just is what it is. So
I just follow the directions.
yeah, you did a good job.
Yeah.
Nice
yeah,
job.
it
So
is
now I'll
fantastic.
let you answer this first. Lisa's
Yeah. Mhm.
turkey mash. You probably do the mashed green bean thing.
We do. I like to make it fancy, but
I know I'm out, Lisa.
yeah, I like to make it fancy.
Oh, that's right. You put a little sprinkles on top and make it a little.
Little sprinkles on top.
I do. I like it crispy. I don't like the
Yeah.
little,
Yeah, no,
like yeah.
same.
Okay.
So what sector is the turkey?
So I'm gonna go a little unorthodox here. When I think about the turkey, I was thinking about ag companies, and they've looked like dog.
Wow,
for
he's
the
really
last
going
couple-
off-roading
yeah.
on these.
So I'm gonna say industrials as a sector is gonna
okay.
be, just think about cyclicals and new animal spirits and all that stuff for next year. I'm thinking industrials might be there. Everybody's been focused on tech forever, so I'll probably be very wrong with that. But the green bean mush that you articulated, I'm going to say is materials.
Okay.
Oh.
So the name that comes to mind, it's the one that looks beat up. People are like, ugh. Specifically, comes to mind is like Lyondell. You get
Oh, wow.
get chemicals companies that just not in favor at all, extreme contrarian positions, but you've got some interesting fundamentals there. And when things are left for dead,
The green beans are back.
the green beans are back on the plate.
Wow. That's an interesting.
Yeah, that's an interesting take. Mhm.
All right.
Keith, what do you think? What
well,
is your turkey?
My turkey, since it's the son of the meal, you always got to have it. It's going to have to be technology,
Yeah.
which is no
Mhm.
shocker there. So I'm not really raising a whole lot of feathers on that one. So it's turkey. I think technology it's when you look at the S&P 500, it's over 35%. So it's hard to argue that something else is going to be the center of your plate. Other than
Mhm.
now, you may have a little less turkey, maybe more beans or something, right? Or more potatoes or whatever the case, or Kyle's pie maybe.
Mhm.
So then I would have to say the green beans. That's a good one. I'll have to go healthcare. It's kind of
Oh, hell yeah.
it's
That's
been
a good one.
massive
Oh,
underperformer.
you stole my
Yeah.
selection,
And I'll
Keith,
just say,
yeah.
well, I'll go in a sub industry. I'll let you have the whole sector if you like. I'll say like a med tech.
Mm-hmm.
It's kind of
Yeah.
I like med tech, fast growing,
Yeah.
but it's been a pretty poor performer.
Yeah.
So that's
So like an Intuit Surgical or like a
Medtronic,
Dexcom,
Dexcom, Abbott.
Dexcom is just
Boston
bad.
Sci's been good, but
Yeah.
and the other thing, we're from Minnesota here. That's kind of the med tech is kind of the capital of the
Mhm.
world.
Yeah.
So
Yep.
our own backyard, our own green beans. So how about you, Lisa? What do you got?
So the turkey, I would say it's also tech because that's what everyone is still talking about and raving about and sharing. And a green bean mash, I would say healthcare as a whole because the
mashed.
sector is just beaten down. We're waiting for a rotation for the longest time, and it's like, okay, it cannot be that bad anymore. But it is for a couple of years now.
Do you like the
consistently.
service names or the pharma names or med tech or just all above?
I mean, you have to be very careful what in healthcare because there's a difference between insurers,
Yeah.
biopharma, or like you say, med tech.
Yeah.
I would say I like med tech more as well, but it's just not worked either.
No. Yeah.
But you have to be very careful
Yep.
what healthcare you are talking about here. But yeah, that's pretty much it. So Kyle got the contrarian view here, which I like.
He always brings that.
Yeah. And also, I still have a lot of learning to do when it comes to Thanksgiving, the holiday itself, which we traditionally not celebrate. So let's turn this a little bit around and add another little game here. It's like which Thanksgiving dish, traditional Minnesotan or not, is the meme stock of the table. So it's very flashy. Everyone talks about it, but it's usually disappointing in the end. Which Thanksgiving dish would be comparable to a meme stock?
Wow. Maybe those Jello fruit kind of salad things for me. That would be my
Jello fruit salad.
Ooh.
Okay,
Well,
That's bringing me back to
right?
my youth.
Yeah,
No,
see,
we don't make those anymore.
No, it's been long gone. But I figured maybe you could relate.
I
At least it's like
definitely
a
could.
Jello. You throw a little fruit in there and maybe a whipped cream on it.
and you call it salad.
Yeah,
I heard
Well,
about
it's a
like
very
Minnesota
Midwest.
salads
It's
that
a very
aren't really
Midwest.
salads. Yeah.
Yeah. I would agree with that. I would say we don't make this anymore either, but it was a staple in my family growing up. Is the sweet potatoes with the cloyingly sweet marshmallow on the top.
Oh boy.
And they looked like, ooh, look at that. And then when you bite into them, you're like,
yeah. That's the same with that Jello thing.
Yeah. I mean, you can make them well for sure. I've seen it done, but in our family,
stick to your pie.
Stick to the pie.
How about you, Lisa? You got any? Since you're just
I have one story when it comes to Minnesota salads. There aren't really salads. We did like a Friendsgiving 2 years ago, and a friend of mine, she's German, but she's married to an American. So we all brought some stuff.
Actually from Germany?
Yes.
Okay.
So we all brought some stuff very not traditional because we all were there and not really knowing Thanksgiving. But her husband, who is American and Minnesotan, made something for her to bring, which was very traditional. She's like, I bring a salad. My husband makes that for me, and I bring that. And then she came with the salad. I've never seen anything like this before in my life. It was pink. There were marshmallows in it.
That's what we're talking about.
That's kind of what
and pineapples.
Yep.
It's
made with Jello, right?
Yeah.
It's
Jello.
I don't know if it's Jello was in there, but it's a Cool Whip.
Yes.
And
That's
it
what
was
we're
like,
talking
I've
about.
never seen anything like that. It was a complete pink mush.
That's very.
Oh, that's what you're talking about. Okay.
Did you like it or no?
The interesting thing is,
it's just
it was
weird.
not bad.
It's not bad, but
that is the weirdest
Yeah.
thing. It was not bad, but I was like, that would be more dessert or something,
Right.
No.
It's
not like
salad.
Yeah.
Yeah.
Right.
No, that's the one I was talking about.
Yeah.
Okay. Okay.
Although I will say we have a tradition for Easter that is we use the pistachio Jello powder, and then you use the Cool Whip, the it's pineapple juice, pineapple chunks, and then I forget what else goes in it, but that's about. And then you whip it up or whatever, and it's like
same kind
it's that concept,
just in green.
And it sounds terrible when you like articulate it like that, but when you eat it, I'm like, This is pretty good with ham.
There you go. There you go. With ham. There you go.
Oh my god. Okay, on that
That
note,
note.
we ended for
Yeah.
for the weirdness Thanksgiving stuff today. Thank you for listening in, and see you next week.